Have you ever wondered how some traders seem to time the market perfectly, getting in and out at just the right moment? In today's video, I'm going to teach you exactly how to follow market trends and time your crypto trades like a pro. Stay tuned. This is one skill that could take your crypto game to the next level. Before we dive in, don't forget to subscribe to the channel if you're new here. Hit that notification bell, like this video, and let me know in the comments your experience with timing the market. Now let's jump in. Part 1. Understanding market cycles. Let's start with market cycles. Every market, whether it's crypto, stocks, or real estate, moves in cycles. These cycles consist of 4 stages: accumulation, uptrend, distribution, and downtrend. Understanding where we are in the cycle can give you a huge edge. Accumulation. This is the quiet phase after a downtrend when smart money starts buying in. Prices are relatively stable, and there's little media attention. Prices start moving up as public interest grows. This is when the media begins to hype up the market and more people buy in. Uptrend. Prices start moving up as public interest grows. This is when the media begins to excite the market and more people buy in. Distribution. At the top of the market, smart money starts selling while retail investors rush in. Prices tend to plateau or even show volatility. Downtrend. Here, prices start to fall. Sentiment shifts to fear and panic, and many late investors sell at a loss. So how do you time your trades? Knowing the stage of the market cycle can help you decide whether to buy, hold, or sell. For example, during the accumulation phase, buying is ideal because prices are lower, while in the distribution phase, it might be a good time to take profits. 2. Sentiment analysis. Next up, sentiment analysis. Market sentiment is essentially how investors feel about the market. Are people optimistic and eager to buy, or are they fearful and selling? A great way to gauge sentiment is by following social media, news outlets, and even tools like the Crypto Fear and Greed Index. If there's widespread excitement and everyone is talking about how much money they're making, it might be time to consider being cautious. On the other hand, if everyone is panicking and calling for the end of crypto, that could be the best time to buy. Remember the old Warren Buffett quote, "Be fearful when others are greedy, and greedy when others are fearful." Sentiment analysis helps you recognize those moments when you should be acting contrary to the crowd. Part 3. Technical indicators to follow. Now let's talk about technical indicators. These tools help you confirm trends and time your trades more effectively. Or moving averages. Moving averages help smooth out price data over time and show the overall direction of a trend. A simple strategy is the golden cross, when a shorter moving average crosses above a longer one, signaling a potential uptrend. Conversely, a death cross occurs when the shorter moving average crosses below the longer one, signaling a downtrend. 2. Relative Strength Index, RSI. The RSI helps measure whether an asset is overbought or oversold. If the RSI goes above 70, it might mean the asset is overbought and could be due for a correction. If it drops below 30, it could be oversold and might see a rebound soon. 3. Bollinger Bands. These bands track volatility and can help you spot when the market might make a big move. When the bands squeeze together, it often signals an upcoming breakout. These indicators give you signals, but don't rely on them alone. Always combine them with other forms of analysis like market cycles and sentiment. Part 4. Putting it all together. To time your trades, it's best to combine all 3: market cycles, sentiment analysis, and technical indicators. Here's an example. If the market is in the accumulation phase, sentiment is fearful, and the RSI shows oversold conditions, boom, that's a strong signal to consider buying in. On the flip side, if the market is in the distribution phase, sentiment is euphoric, and the RSI is overbought, it might be time to take some profits. And there you have it. Now you know how to follow market trends and time your crypto trades with confidence. Make sure you keep an eye on those market cycles, check sentiment, and use your technical indicators wisely. If you found this video helpful, don't forget to subscribe, hit that like button, and leave a comment below. Let me know, what's your favorite technical indicator? I love hearing from you all. As always, stay smart, stay informed, and happy trading. Quick tip before we go. Never make decisions based on emotion. FOMO and panic selling are 2 of the biggest killers in trading. Stick to your strategy, stay disciplined, and you'll do just fine.